Best Buy stock is currently trading at $71.83 per share. Year to date, they're down almost 30%, and over the past year, they're down nearly 46%. So in this video, we're going to be jumping into my stock valuation spreadsheet to see if we can find the intrinsic value of Best Buy and decide if it's a good time to buy. And on this spreadsheet, we'll look at 4 different valuations. We will look at Graham's valuation, we'll look at a discounted cash flow model, a multiples valuation, and a dividend discount model. And all 4 of those valuations will roll into our output tabs. So let's go ahead and jump over to our stock screener. If you'd like to be able to download the spreadsheet, then you can head over to my Patreon page at the link in the description. But let's go ahead and come up here and we will plug in the stock ticker for Best Buy and hit enter. And you can see all of this data is going to automatically load in. Now we're currently looking at a 500-day change, so you can see just how far they've come down from that peak price up here. Now if we come over here and look at the dividend data, we can see they actually have a starting dividend yield of close to 5%, so that's a really good starting dividend yield. They pay out $3.52 per share, and they have a nice safe payout ratio at just 39.6%. It's kind of rare to see a low payout ratio with that high of a dividend yield. Now coming down here, we can see analysts currently have a target price of about $78.38 per share, quite a bit higher than the current trading price, and the beta for the stock is sitting at 1.46. So you are going to see a little bit of volatility. Now institutional ownership was quite a bit higher than I was expecting to see for the stock at 83.6%. But let's go ahead and jump forward and look at our first valuation, which is going to be Graham's valuation. And this is a valuation model invented by Benjamin Graham, who is the author of the best investing book of all time, The Intelligent Investor. And here's the formula he lays out for us to calculate intrinsic value. So the first thing we need to plug in is earnings per share. And for Best Buy, that's currently sitting at 7.47. We then multiply that by 7, which is the price to earnings of a company with no growth, and then we apply our growth rate projection. Now I was looking at analyst growth rate projections, and I jumped on to Yahoo Finance, and I was actually surprised to see how high the growth rate projections for this company were. We can see over the next 5 years, analysts at Yahoo Finance are expecting 8%. I saw similar projections on other websites as well. I'm expecting a little bit lower than that, honestly, so I'm applying a 7 for growth rate, but then we multiply that by 4.4, which is the average yield of AAA corporate bonds, and we divide by Y, which is the current yield on AAA corporate bonds. And we put all of these together, we come to an intrinsic value of about $88.50 per share. So that is a bit higher than that current trading price. But let's go ahead and move forward and look at our discounted cash flow. And so we can see here, I plugged in the historical free cash flow for this company so we can see our year over year changes, and it has fluctuated year over year quite a bit. They had a really good year in 2020 and a little bit of drawback in 2021, but still pretty good free cash flow growth over that time. So moving forward, I'm projecting a 4% growth rate for the future free cash flows for the company, and I'm applying that growth rate to the terminal value, which is the sum of all the future free cash flows past the year 2030. I then took the present value of those future free cash flows and added them together, added the company's cash and cash equivalents, and subtracted out their total debt to get their equity value. Once I had their equity value, I divided by the number of shares outstanding to get a discounted cash flow price per share of $143.77. Now let's go ahead and move forward and look at the multiples valuation. But before we move on to the multiples valuation, I want to take 20 seconds to say thank you to Mandel Capital Management for sponsoring this video. The Mandel Capital Management Investment Checklist is a book that covers all things value investing. The book answers many of the questions value investors run into, and it also outlines how value investing can lead to superior long-term returns for investors. You can buy this book on a discount at the link in the description. And here on the multiples valuation, you can see some of the comparable companies that we're using. And essentially what we're doing is we're seeing how the market is valuing companies that are similar in structure to Best Buy. So we're taking their stock price, dividing by the number of earnings per share to get our price to earnings multiple. So that gives us our average price to earnings multiple for these comparable companies. We then multiply that by Best Buy's earnings per share, which is $7.47, to come to an intrinsic value of about $85.36. So if we jump back over to our stock screener, come down here, we can see Best Buy's price to earnings is $9.61. When you compare it to the average price to earnings of their comparable companies, it is a little bit lower, which leads to that higher intrinsic value. Now moving forward, we're going to look at our last valuation, the dividend discount model. I think this is a very important valuation model to look at if you're a long-term value dividend investor like me, because it's going to value a company based on how much they pay out in dividends and how much that dividend grows, which is very important. So we can see I plugged in the quarterly dividend payouts over the past few years here, so we can see how much they pay out each year. This allows us to see our year-over-year dividend growth rates, which has been very good for Best Buy. 11%, 10%, 27%, and 25%. That's pretty unbelievable dividend growth over the past few years. That gives them an average growth rate of 18.52%. Now, I don't think it'll be that large for a very long time, but I do expect to see good dividend growth for the life of this company. So I'm projecting a growth rate of 5.5% and a discount rate of 9%. Now, anytime you do have a company that you're projecting a fairly high growth rate for their dividends, you do want to jump over to the stock screener. And again, we'll glance at that payout ratio. We can see a nice safe payout ratio, and we do expect them to have growing free cash flow as we saw in our discounted cash flow model. So I do think this is a sustainable growth rate for this company. So when we apply those two together, we come to a dividend discount model price per share of $106.10. So when we jump over to our output tab, we'll see all four of our valuations: grams at 88, multiples at 85, discounted cash flow 143, and dividend discount model at 106. And when we average all four of these together, we come to an intrinsic value of $105.91. Now, the current trading price for this company is about $71.87. But let's say we want to apply a margin of safety of about 20%. Based upon that, our acceptable buy price for the company is sitting at $84.73, meaning now may be a good time to consider adding shares to this company. Now, you do have to keep in mind they do have some fierce competitors. They're going to have to compete against companies like Apple, Walmart, and Amazon, so that may hinder long-term growth for this company. But based off of our valuations, it looks like now may be a good time to consider looking at this company. Great starting dividend yield, good future free cash flow growth, and good dividend growth over time. As for me, this will be a company I'll look into a little bit more and see if I'm comfortable with buying. I really like the starting dividend yield, so it may be a company that I do end up adding. But there you go. There is a Best Buy stock analysis. If you'd like to be able to download the spreadsheet, then you can head over to my Patreon page at the link in the description. So that being said, thank you guys so much for watching, and please don't forget to like and subscribe to the channel.